But let's move on. In its latest deep dive into the equity derivatives market, regulator SEBI has highlighted a recent cooling off in the trading frenzy, but with a stark reminder of the risks involved for retail investors. We have Charu standing by with an update on this one. Charu.
Hi, so the market regulator Securities and Exchange Board of India has come out with another study that is saying that about 91% of the individuals, retail investors who are trading in F&O segment are facing losses. Now, we also know that last year, around the same time, the regulator had come out with another such study for FY24, where about 9 out of 10 people, or about 90% of the retail investors participating in this segment were facing losses. And since then, we must understand that the regulator has come out with curbs on this segment twice, or basically a rejig of sorts twice. In October, there were about 67 curbs that were imposed, which influenced the volumes quite a bit. However, there were another FNO 2.0 regulations that came out recently, which changed the, open interest method into a delta method, and the position limits and options were also increased. However, now, as per this particular study, we have come to know that the index option turnover fell 9% in premium and 29% year on year. However, if we compare it to the period of 2 years, we see that the turnover rose 14% in premium and 42% in notional. In fact, the individual turnover got down by 11% on year, but up 36% if we compare the data from 2 years. So while there has been a reduction or decline if we consider a period of only a year, however, as we compare it for 2 years, we come to know that there has not really been a significant decline. Now, the regulator has maintained that after this data and after this white paper, it is going to, once again consider what can be done to deal with the volumes, because we must also consider the fact that recently the regulator came out with an order against Jane Street. So it already is considering if weekly expiry contracts are all right, if we need longer expiry contracts. So let's see how the developments further roll out, because the last time this led to really big developments in the regulations in this segment.
Well, absolutely. 91% individual traders face net losses in financial year 25. That's something that is very important to highlight that Charu just talked about. But let's move on. Let's take a look at crude for just about a minute. The Organization of Petroleum Exporting Countries earlier this week came out with a very important output hike. 548,000 barrels per day is something that they've raised output by in the month of August, more than what was being penciled in. So what was being penciled in previously is 411,000 barrels per day, and that was the hike that they had made for the earlier 3 months. Now, when you're looking at Brent crude, overnight it fell about 2% in fact, and over a $1 decline coming in as far as Brent is concerned. You're looking at similar levels as far as US WTI is also concerned, 1.5% downtake for US WTI as well. Overnight, $67 a barrel is something that you're looking at for the levels there as well. The OPEC Plus decision, of course, is going to be bringing in nearly 80% of the 2.2 million barrels per day voluntary cuts from 8 OPEC producers back into the market. So that's very important to note. And it's very interesting to also note that in a show of confidence about oil demand, you did have Saudi Arabia over the weekend also raising the August price for its flagship Arab light crude to a 4-month high for Asia as well. Goldman analysts also expect OPEC Plus to announce a final 550,000 barrels per day increase for September at the next meeting, which is going to be held on August 3rd. But let's move on. Let's take a look at Morgan Stanley and the note that they've come out when it comes to the recently listed Sloss Bangalore, highlighting Leela's luxury play as well. So they've in fact initiated an overweight with a target price of 549 rupees. And they're talking about how Leela, the luxury play, is one of the limited ways to play the India luxury story as well. Overweight rating is also driven by a higher for longer upcycle that they've also highlighted. Other than that, they also see strong demand for the luxury experiences. Have also highlighted that the company, in fact, has iconic assets with a low net debt position. Attractive valuation is also something that they're quite happy about. Steady execution is something that they also see as a key trigger to be driving the re-rating. But concentration risk is something that they're saying is key to watch at this point in time. But tell you what, with that,